All right, what we're going to talk about though in this lesson is low float stock. In a lot of my videos, you guys will always hear me talk about or mention a stock's float. And for those of you that don't know what a stock's float is, to sum it up real quickly, it's the available amount of shares for the public to trade, for the average retail investor, which is you watching this video, and myself to trade. It's not the total number of shares that the company has, period. It's the available amount of shares for the public trade freely with their brokerages. Now with IMTE here, this is what I would like to say is a nano float stock. A nano float stock for me, when the float of the stock is under 1 million shares. We'll pull up Street Smart Edge here, and I'm gonna highlight a little area right here. The total float, it says it right there real small, is 225,000. That's a super low float stock, so I would consider it a nano float. A nano float, anything under 1 million shares in my term is nano. We got IMTE 225,000 float. It says here on Street Smart Edge. Let's pull up another stock that's a nano float. MARPS. This one's almost a nano float. The float on it is 1.6 million. Now, even though million of shares, that is a lot. It's a big number, but in the financial world, that's really small. That's really small. Another one here, ISIG. The float on this is only 1.1 million. Really low float stock. Now, when you get into your bigger name companies like Ford, ticker symbol F, you see the float on this is 3.9 billion. That's a massive float. Massive. Facebook, 2.3 billion float. Tesla, 857 million. So the float on these are bigger. Whenever you have a bigger float, you're going to need more volume to get price action up and going. You don't have to worry about these big name companies because every single day they have a really good consistent volume. On average, you could see Tesla here does on average 32 million in volume on average every single day. And that's just going off of what I see with my eye. So every day they're rotating that float, or every 2 days, I would say they're rotating the float on Tesla. Or every week, I would say they're rotating the float. Go back here on IMTE with the float on this at 225,000. Don't just use one source to get your float. The more sources that you have, the better. You're going to see a lot of traders out there. They like to use, for example, Yahoo Finance. We look up IMTE on here, go to the statistics. You see the float here. It says it's 12.9 million right there. We go to finviz.com, another popular website traders like to use. You see the float here, 5.6 million. So we're cross-referencing on what's the average float for this stock, because every website is going to update their information. We don't know how often they update it. Finviz could update it every month. Yahoo Finance could be updating their information every 2 weeks. Street Smart Edge, who knows how often they update their information. And now, just for example here too, if you have a Discord and you have a stock bot, I can type in float. We could see what the stock bot says the float for IMTE is. Here on IMTE, it says the float is 5.6 million. So it looks like it's getting its information from Finviz because it's correlating with what the float is on Finviz. Still, with all three of these sources telling us that the float is 200,000, 5 million, 10 million, we could still say that the float on this is still pretty low. It's a low float stock, IMTE. And going off of the daily chart now as well, You could scroll out on this daily chart. Now every candle on a daily chart is one trading day. So when looking at a daily chart, what I want to be seeing are big green candles or very long upper wick. That's telling me that the stock has ran in the past multiple times. These are little characteristics that traders like to look out for, because for traders, we need volatility to trade and make money. We need it. Looking at the daily chart, you could see there's a long upper wick with a red body here, long upper wick here, few big green candles, upper wicks. There's been recent run-ups on this stock right here. So it's telling us multiple times here on the daily chart that this stock has ran in the past. We're looking for characteristics. When you look at these stocks, you want to kind of be looking at them like people, picking up on human characteristics that the stock has for any future analysis, I'll say. So we're seeing here multiple times that this stock, it likes to run. Obviously, we're paying attention to the bare bone basics is what we're looking for. Recently too, let's zoom in on this. This stock has had multiple run-ups for days straight. All right here, fell down for multiple days, and now it's doing it again. See how these patterns are happening over and over? We've had multi-day run right here, then it fell down. Then we had multi-day, multi-week run right here, multi-day, multi-week fall down, and now we're doing it again as we're running from $4 up to almost $10, running up $6. Now we can zoom in. Look at the 10-minute time frame. So for every candle on this chart, it's going to be 10 minutes of trading. The stock recently had a run up right here, running up to $35. After it ran up to $35 and topped out, it fell down, giving back all of its gains, falling all the way to $4 right here. You see how it just stopped making lower highs, lower lows, and it just flatlined at that $4, testing that $4 multiple times and going flatline, as I like to say. From flatlining like that, it starts to lift up, and now we start to trend back up, repeating the pattern over again. And now this is where you also have to tell yourself, how are shorts thinking? When shorts have this run up here to $35, you got to think of all the short sellers who enter in on this for that downfall. And then once the stock going lower, they're not making any more money. So they have to buy, cover their position. And then you have long retail investors entering in on it as well. This is what causes little short cover opportunities, short squeezes. We've been trending up, just gradually trending up, and you can even follow this red moving average here. And this is one of the benefits, I would say, in having moving averages on your chart to get an idea of the trend for the stock. With this red moving average here, we're obviously trending up, and every single time that this stock fell down, it bounced right off of that red moving average and ripped right back up. And when we zoom into the 1 minute time frame, you could see price action gets a bit scary when looking at this 1 minute. It looks totally different than when we're looking at a 10 minute. Looking at the 1 minute, going back the last 2 trading days here, look at the price action. Here we were at 850. We free fell all the way down here to 650. That's a $2 drop right there. Then we quickly recover and we run up to new high on the day. From 650, it runs up here to just over $9. That's almost a $3 run up right there. Then even going into today's trading action, this stock got halted a few times. This stock was up here at $9.25 right there. It free fell to the downside right here and got halted at $7.75, and it even had a bottom wick right here to $7. So this stock fell $2.50 to the downside, and then look at it rebounds right back up, and now it's right back up here at its high of day. So price action like this, it could easily punk you out, It could mess with your head. If you go in too big with your size, you'll get stopped out. You're not giving the stock room to breathe. You're letting the price action freak you out. So that's why it's good to know what your stock's float is. And when you come across these low float stock, you should automatically say to yourself, okay, this could be a super volatile stock because of how low that float is. There's low supply of it. One of my favorite sayings is, the lower the float, the bigger the rip. With as much price action and volatility we've been seeing here on IMTE, and even with some scary downfalls the last couple days, this is still technically bullish. Even with it falling like it has, it's recovered its gains really well. I just dropped a video recently that talked about looking out for V shapes in charts like this, or a stab in the chart. If ever you have a big sudden drop like this and the stock quickly recovers what it dropped and then runs up, that's, to me, is showing bullish strength. So with the stock falling down like this and then quickly rebounding right back up and pushing up even higher, that to me is screaming bullish strength. For it to fall down like that and quickly recover what it dropped and then even pushed up higher, that's showing strength. Even with this run this morning, how it ran up here to 930s and then fell down here to 7, how it quickly rips right back up to its highs, that's showing strength to me. If it was weak, this stock would have kept crumbling and falling down lower. Now, this is where you have to ask yourself, as a trader and investor in the market, what type of trader and investor are you? For some people, they don't want nothing to do with the stock like this. It's just too risky. They don't see the risk versus reward. They don't see the point in trying to trade something like this. It just doesn't suit them. Versus there may be other people out there, they see opportunity in stuff like this. They see the risk versus reward. This is where it starts to turn in the markets, and you have to truly know yourself and what you like to look out for, and why I say to you guys, you don't want to really be following anybody's strategy or trading alerts out here. You want to be studying these charts and finding out what type of stocks that you yourself like to look out for. Because for me, I like trading these types of stocks like this. There may be people out there that don't like to trade stock like this, and that's perfectly fine and okay. This is a super risky stock. Super risky if you don't properly manage your risk. And you see, there could be somebody out there putting out a trading alert for a stock like this, and let's say a newer trader comes into this, they could be going all in on a stock like this, and when they see it drop like that, $2, $3, and then stop them out and then quickly rip right back up to new highs, that's going to trigger emotions, and that's when they're going to emotionally trade and blow up their accounts. This is how volatile IMTE is. Let's look at MARPS real quick. This is another nano float type of stock, and that's going to be the focus of this video. MARPS, we were just looking at this. The float on MARPS here on Street Smart Edge, it says the float is 1.6 million. Now let's go over to FinViz and Yahoo Finance. Type in MARPS here on FinViz. Oops, if I can type correctly. So MARPS on FinViz, it says the float is 1.6 million. So that's a low float stock, most definitely. We'll check Yahoo Finance, and we're cross-referencing. This is what we're doing. We're not relying on just one source to get our information. This is where going above and beyond can benefit you, and you're putting in that extra work, and you're going to have that edge over your opponent. You guys, if you're a trader in the markets, it's you versus everybody else. There's people out there that look at this like it's us versus the institutions and the banks. I don't look at it like that. I tell myself there's a lot of stupid money in the market. I mean, look at everybody who jumped on the AMC and GameStop train. And we said, you guys, don't fall for it. It's not going to do what you think. Look what happened to AMC and GameStop. So I like to tell myself there's a lot of stupid money out here. And the more you educate yourself, the more edge you have over your competitors. I'm not looking to go up against the institutions and the banks. There's a lot of dumb money out here to just be taken, you guys, for real. So Yahoo Finance, look at the float on here. It says 1.6 million. So we verified now from 3 different sources that the float is 1.6 million. So I think it's safe to say the float is near 1 million for MARPS. With the float being that low, expect volatility, huge price swings, and especially if you don't have that much volume flowing in on this stock, you're going to see wild spreads between the bid and the ask. And there are traders out there that will trade that spread to make a profit. You could see upwards of $1, $2 spread between the bid and the ask. And there are ways to make money from just trading the spread. It takes a lot of patience, and it's about timing, but you can consistently and profitably make money from just trading the spread. Looking at the daily chart and on MARPS, you could see when we scroll out on this, we got big green candles with long upper wicks right here. Long upper wick, big green candle, big gap up day here. And you could see recently this stock had a huge run up right here, running from $4 all the way up to a high of $32 a share. So what's that telling us? That's telling us that this stock likes to run, and it's got a history of running, right? These are little characteristics that a lot of people easily overlook. So with this stock showing us that it likes to run in the past, even if it doesn't hold its gains, it likes to run. That's what traders like to look out for. For us as traders, we're not looking to hold on to these stocks for days, weeks. All we're looking to do is trade it. That's all we're looking to do. We just want a slice of the pie. Even out of this whole move here, right here, and then selling off all day, who knows how many times this stock bounced up $3, pulled back $1, ripped up $3. You're just looking for a little slice of the pie, buying here, selling there, taking your profit, and then coming back and doing it again the next day. So with MARPS, now we can look at the 1 minute time frame to see how spotty this chart is. Right here, there's really no volume, no price action going on. And then from $7 within a couple days, this stock is getting some activity here, and it's gapping up and it's ripping up here to $10 a share right here. With it getting this recent activity flowing in on it, MARPS, it's in the oil and gas sector. So recently, we can pull them up. We had stocks like INDO, which is an oil and gas energy. You could see energy right there. These have been up and in play recently. You could see Friday INDO perked up a little bit here. Then the weekend goes by and Monday comes. We're gapping up pre-market right here, and we've been getting a pullback all morning here. So all of these energy and oil gas related stocks, INDO, HUSA, all of these stocks have been perking up and heating up. HUSA, another energy related stock, running from $3 gapping up this morning, running up here to 560s. All of this is going to correlate with all of these other oil, gas related stock. And an easy way to do that, jump over here to finviz.com. You see we're looking at MARPS here. It's on the NASDAQ. It's in the energy, oil, and gas equipment. So click on energy. That's in the energy sector. We filter it quickly by the biggest percentage change. And you can see there's HUSA, number 1. MARPS is number 2. INDO is right there at number 8. We also have ENSV, that's a familiar name. Where's another couple familiar names? PED is a familiar name. We're just going by the trend. We've seen oil and gas stocks gapping up this morning. Head over to FinViz, look at the biggest percentage change right here, and you got a big list to choose from of all of these stocks. Now it's something like MARPS, with it being a low float like it is, you could be telling yourself, all right, so if INDO continues to keep running up and making new highs, and if we see HUSA run up and keep making highs, chances are all of that's going to follow through to a stock like MARPS. And you could see the price fluctuation, even with it having not as much volume. It's all about finding your edge in the markets as a trader. And that's why by showing up every day, you're putting in that work, you're noticing little things about yourself, consuming all of this information and education, and using it to develop your own playbook and your own strategies. That's what it's all about. Look at another one real quickly here. ISIG is another low float stock. ISIG, the float on ISIG is 1.1 million for ISIG. Look at the float here on FinViz. The float is 1.06 million on FinViz. Yahoo Finance, ISIG, it says here the float is right here, 1.06 million. So all three sources have the same. Looking at the daily chart, scroll out on it, you see that there's multiple big green candles. There's a lot of long upper wicks, and there's a real obvious big run up right here from $5 a share, ran all the way up to $35 a share. And look at how many times this stock has bounced. Rips up here, pulls back, rips up again, pulls back, rips again, pulls back for days and weeks. You finally get a rip right there. Pulls back, $8, rips up here to $15, pulls back. This stock, it likes to run. It's obvious on the daily chart. Now we can zoom in. This is the 1 minute chart. Look at the last 3 trading days. Little, no volume. You see it starts to trickle up right here. And then look at that volume explosion right there. And prices from $8 right there, it explodes and rips up to $10 right there. With that's supply and demand taken in effect right there. With it being a low float like it is, and you get that explosion in volume there, that demand hitting that low supply, prices are going to rip to the upside. And from $8, it rips up $2 a share. And since that explosion there, this stock has been holding its gains, and you could see somewhat with your own eyes that this stock is like wedging out at that $10. It's been holding most of its gains. It's looking like it's trying to squeeze up even higher. Even looking at the 10-minute time frame here on ISIG, look at how many spikes are on this chart right here. This is what traders are looking for. They're looking for big price action moves like this, because this is where we make our money. Runs here from $6.75 up to $10.75. That's a $4 per share rip to the upside. And this is a low float stock. That's why a lot of your gurus out here, and myself even, this is why we like to look out for low float stocks, because it doesn't take much volume to get the price up and going, or the stock up and going. And by studying this, you're educating yourself. You see this happen over and over and over and over again. You're looking for human behavioral patterns. That's all we're looking out for. See, look at, for example, here, this stock, CTT. The float on this is 48.7 million. That's a medium-sized float. So with a medium-sized float like this at 49 million float, you're not going to see big, huge rip like you would like a low float stock. Looking at the daily chart, see it clear as day versus a low float stock. When looking at the daily chart, you're not seeing a lot of big green candles, a lot of long upper wicks. You're seeing a lot more of a body, small little bodies of each candle. There's not one day besides this big drop off here, right there. There's not really one day where you can just say, dang, this stock ran in the past. You got all of just these little gradual green bodies here and red bodies. That's all you got. This stock, it's not a runner, as we would say. So this isn't something you'd be looking to have huge big rip to the upside. Look at the 1 minute time frame. Scroll in on this. There is some volatility in this stock, but you're not seeing big explosive moves. You got good volume in on it today. Prices went from 1120, runs up here to 1190, pulls back to 1150, then it grinds right back up to 1190. Then from 1190, it grinds up here to 1235. You see how the stock's moving? It's moving on average and it's grinding. It's not exploding and ripping up to the upside. It's grinding because that float, it's a medium-sized float. So you remember the float on this stock, CTT, it's at 49, almost 49 million float. So you're going to need a lot more volume to get prices up and going for a stock like this. But there are some benefits to trading medium to large float stock. Think of the float like a train. The larger that float is, think of the stock like a bigger freight train. Once you get that freight train going in one direction, it's going to be hard for just one person to change that trend. Versus a low float, you can look at that stock like a speed bullet train. I don't know my trains. The lower that float, the smaller and faster that train is going to go. And someone can easily manipulate a lower float stock. This lesson's going to be super, super long and a bit everywhere. This might have even hurt a few people's brains, but it's a lot that goes into this, and you're only going to get better by practice, showing up every day, educating yourself, and knowing what to look out for and putting it together yourself or with a community. So pay attention to a stock's float and remember that saying, the lower the float, the bigger the rip. IMTE, with it being a low float like that, you're going to see stocks like this effortlessly rip up and down dollars at a time. Same thing with MARPS. See, look at this stock's up here at $10.15, and look at it, how effortless this stock just free fell down to $8.75. That's a $1.50 downfall, no problem. And then ISIG, look at how this stock's just sitting here, and then just how effortlessly from $8 it rips up here to $9, and then rips up to $10.50, and then in a blink of an eye, when it's up here at $10.40, just free falls and drops to $8.50. That's a $2 drop in a blink of an eye. And this is a 1 minute chart, so every candle is 1 minute of trading.